And what's going on, guys? So I get a lot of emails and DMs and Gabe, how do you trade? What's your trading strategy? You seem like a pretty decent options trader, and I think I am. So it'd be appreciated that you hit the like button, hit the subscribe button, join in on the comments below, especially if you gather some really valuable information in this video, which I intend to. So game on, hold my beer. Let's get right into it. We're looking at ES here. Now, I'm an options trader, but my strategy pretty much works across all asset classes, whether it's crypto or Forex or futures. And what we're looking at is ES. So we're playing futures. Now, futures, you guys get to see the number down there. With options, I like the inclusivity of percentages, right? Because it's percentages is more a gauge of your performance than dollar amounts. Let's be honest, right? So anybody who's looking in this game or looking to get into this game because the numbers just seem so sexy, it's like, no, just switch over to percentages. They become a little more boring, but you end up respecting what we do occupationally because I am a full-time day trader. Now, let's go ahead and break this down. What are we looking at? Volume. For me, I need to see volume break above the 20 moving average. Now, we're on the 1 minute because it's going to accelerate this this video and this trading strategy, but you can apply the strategy to all time intervals, okay? All time intervals, you can explain, utilize the strategy as I explained it to you, okay? So let's go back to the 1 minute here. Now we have volume. Go ahead and add that to your chart there, whether it's TradingView or wherever you're trading, and just be mindful of the 20 moving average. Now, the next indicator that I like to use is the MACD, and I know the MACD seems sort of kind of elementary, like MACD, really? It's a lagging indicator. No, it is a lagging indicator. However, it gives you a great story. It tells you what's really going on. However, I do use different settings with the MACD. As you guys can see here, my settings for the fast length is 24. By default, it's 12. My slow length is 52. By default, it's 26. My signal smoothing is 18. By default is 9. Now, what's happening here is we are smoothing price action. Next up, we have RSI. Again, Gabe, that's another lagging indicator. Like, what are you doing here? Well, listen, there's a different way to use RSI, and I like to use RSI as a way of showing momentum and strength in that momentum. So with RSI above 50, which is your dashed lines here, we're in an uptrend. RSI below 50, you're in a downtrend, as you could see there, right? So RSI was below 50. Now we like to look at the moving averages as a confirmation of entry and exit, right? When you get RSI breaking its moving average, it usually means like, hey, maybe it's time to enter or it's time to exit. But we're not going to cover that so much in detail. We're going to move along to what we call the thigh gap indicator, thigh standing for the high yield indicator. And it does a great job in signaling possible reverses. And as you can see on the 1 minute here, we had a rejection from the 200 EMA. And before I get into everything else in here, I need you guys to understand that we work in EMAs, not in SMAs, and that makes a world of a difference, okay? So what I'm going to do is I'm going to go ahead and draw a line here. Actually, let's get this the right way. Okay, so we have a line here. You got signaled here with thigh gap. It gives you a little pointy finger that there was a reversal. And the reason why it does that is it's a great way to alert you, especially if you got in at the origin of the trade, to alert you that, hey, you're gonna reject from here, okay? Now you guys are watching this in real time, and let's get right into it. So what is this red and the green? This is what's called our Confluence indicator. We get this in master signals. As you can see, we have a lot of different things that basically help us to create our trade thesis. But ultimately, what Confluence does is it compresses our proprietary calculations and it condenses other indicators that you're not seeing here to empower you in your trade decision. Moving along, that's what that is, okay? But moving along, you have the 24 EMA, the 13 EMA, and the 48 EMA. And some of you may remember me from Trade 1348, and yes, it's only the most profitable crossover on Earth, proven academically, and I can include that link down in the description. So what we have here is when the 13 crosses the 48, that's time to enter your call contracts or go long. I have the signal here because, like, once again, I'm an options trader. If you get a 13 crossing below the 48, you get your put signal, as you can see highlighted there. Now we also have something that helps you take advantage of the micro shifts, right? Again, conditions need to be developed in order to capitalize on it. But let's say we are now in a put trend and you want to identify the continuation after we got the bounce. Well, we have a traffic light saying bullish, but then we hit a level, reject from the 200. Then you get a corrective traffic light, which would also act as your stop, which would then allow you to make money on the meat of the move. Now, stops are important. Guys, what I like to do is win fast, lose faster. Very, 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 very important, okay? Win fast, lose faster. Otherwise, if you don't have a level of risk, you're going to end up holding the bag and you're going to end up blowing your portfolio. So let's get right back to it. I need a trade design, and we're looking at the 200 EMA. Guys, every trade starts with a trade design. And my trade design is going to be defined with an entry, a level of risk that I'm willing to take. And so my trade design is, if we get a break of the 200 on candle close, I will enter. And if we break out of this trade design below this red box, I will exit. This is a 2-to-1 risk to reward. This is something I'm comfortable with. I do not take trades unless it's a 1.5 or better, okay? Guys, do not enter trades without a trade design. Otherwise, you're going to find yourself chasing all the time. Now, I should have been in this play, but I'm doing a video. But as you can see, it's all panning out. We have this blue line. We have this light pink line. But the blue line is confirming bullishness. This light pink line is confirming bearishness. And so now that we have Confluence, which is being shown by this candle here, as you guys can see, it's developing, and we have the bullishness with what we call golden eye, it's giving me confidence in the trade. So what I'm going to do is I'm simply going to buy, right? Now I'm in this trade. We have a candle close above the 200 EMA. We're well within the trade design. And what I'm going to do right now is pay attention to my indicators. More importantly, I need to pay attention to RSI and its moving average and the way it is trending. Again, above 50, we're bullish. We get a break below the moving average, and this could signal that price action's coming down. Also, we have another signal right here from thigh gap here, signaling a reversal. You could see it pop up right here. If you can't see it, let me move it over a little bit, make sure my face isn't blocking it, but you could see it right there. I'm going to go ahead and just draw this out for you. Oops, wrong one. There you go. That's the right one for you. And you could see right when we were signaled and right where we had this here, which we call golden eye, signal that reversal, you saw price action come to the downside. Now, I'm still in this trade because I have not broken out of this trade here, right? Now, what I also like to do is go on over to the 5-minute, because the 5 minutes going to show me the larger trend. Now, one of the things I also like to do is I like to enter on the 1 but live on the 5, right? The 1 has a lot of noise, but once again, guys, look at it's really a matter of illustrating how I trade, okay, and the indicators I use to trade. So in this instance, again, we win fast, we lose faster. Once I break out of my design, this is very, very important, guys. Once I break out of my design, that loss is non-negotiable. I do not hold for the trade to come back. I do not. There you go. We got a break. Do we get a candle close? I'm waiting for that candle close, and we get a candle close out of this trade design. I close my position. I also then refer to the 5 minute to understand what is happening inside the 5. And the 5 just signaled that we are getting a reversal. You can see it there, that light pink just printed. So what I do is I go back to the 1. I simply get out of my position right there. And then now I have a trade design to the downside. And I'm going to go ahead and create that short trade design. It's really, really simple. I'm going to go ahead and define my risk. We're going to go ahead and wait for the break of the 48. And we're going to bring this down to a level. Is there a level in this area? We happen to have one right here. Good. So we can play it down to this level. And that is a 2.43 risk to reward. And that is on the 1 minute. So we're going to play this trade design. We are going to go short. And we're going to see how this plays out. Now, there's also something else that I do, and I want to make very, very clear. I don't do full allocation on my entry, okay? I did a very small allocation, 2 contracts, 2 lots on ES, a small allocation. And the reason being is like I like to treat trading kind of like boxing, where you're using your jab to set up the trade, and then you follow through with the hook or the haymaker, right? So you're essentially adding to your trades that have been confirmed. It falls in line with just the saying, buy your winners, right? You buy your winners. So what I would do is once I get more confirmation into this trade, I will buy my winner. What we're seeing now is we have agreement through all indicators here. We have volume, showing, we got that volume below 20 moving average, red. We have RSI below 50, below its moving average, indicating a downtrend. We have die gap printing yellow, which is also indicating a downtrend. And what we're doing is we're paying attention to RSI, okay? RSI breaks above 50. That's usually an indication that, hey, this trade might not be going as planned. But all indicators look like, I'm good to go. And in this trade, currently up $25 in ES, I can go ahead and add to the trade, but I don't see a level. Well, actually I do. I have a level right here, right there. This is a level of which we break. I will add to that trade. So let me Alt H it, and we got a break of that level. I could go ahead and add to that trade. And I actually ended up closing myself out. And I closed myself out in profit. Oops, I hit the wrong button. This happens when trading futures. You hit the wrong button. But what you're seeing is how we go ahead and design our trades, and how we go ahead and minimize our risk and put ourselves in profitable high trade situations. Guys, this is all real time. Now, this is actually by habit. I took profit by habit because normally I do take profit when we hit a level and I wait for the candle to prove itself. So what we can expect is a retracement here, just a slight retracement back to this level. And then we're going to go ahead and look at the indicators a little bit. We'll confirm with the indicators. Okay, now we're in a put. This gives me more confidence. I'm going to go ahead and enter once again. This is going to put me in the trade. Let's see if we can get to the bottom of this trade design. Everything is about trade designs, okay? And it's all about managing risk. Depending on the size of your portfolio is really going to depend on how much you enter. But one of my rules is you only risk 1% of your port. That's all you're risking. And with the portfolio at 52,000, losing $200 is really not a big deal. Okay, so 1% of that would be $500, right? So I keep my losses super, super tight and always put myself in a position to have a winning trade, especially when we have something with a 2.43 to 1 risk to reward. All things are looking good. So what's happening in real time? We're seeing how you have this here. You are seeing how GoldenEye is coming on down. MACD, it's making its first cross here. You're showing your first print of red on the histogram. RSI is still below 40. Not quite trending down the way I would like. I'm going to go ahead and take a peek on the 5 minute to understand what the larger trend is so I don't catch any surprises. So the larger trend here, let's remove these drawings here. The larger trend here is you have RSI below 50, below its moving average, and you have a very, very, very thin MACD. You also have GoldenEye on the larger time frame telling you, hey, we're bearish here. You also have thigh gap showing you right here that we have some bearish strength. So this is all about having confidence in the system and having confidence in the trade design. And as you could see, we have a continuation. Looks like a possible reversal, and that's fine. What ends up happening is I create the trade design. I go long on the break here. This would establish my risk, and then my reward will be the 200 EMA. That's a 1.25. I don't like that. So once again, I'm looking for another level to help me establish that, which I just found right there. Let's see if that helps me tighten things up. And it just really doesn't, right? So this entry point here probably would not be ideal. And here we go. The trade is following. It is following what we have here, go deny. Once go deny signals, it usually means you better pay attention. But I also, once again, guys, I live on the 5. So I'm just going to hang out here on the 5, and I'm going to let the trade develop. That's all I'm doing. This is the boring part. This is where the psychology of the trader is being challenged. This is where you start questioning everything. This is where it's like, oh no, I'm losing a whole lot of money. But guess what? That's why you only enter with a small position so that it can develop. I already won the first half of my trade. I'm looking to win the second half of my trade here. Okay, so this is what we're waiting for. We're going to see if we get a continuation of this trend coming down to this level, or we're going to get a bounce. And I have confidence that we have a continuation. I have confidence in my system. I have experience in my system. And, you know, I absolutely believe in this trade design, okay? So don't allow yourself to be derailed with candles. Candles are all psychological. You want to stay away from that. You want to pay attention to your levels. You want to pay attention to your indicators. You want to pay attention to the larger trends, right? Remember, you're trading with the trend, and the trend is your friend. Now, what happens here is that if we go too premature here, and then you get a candle, big doom candle, where it falls beneath you. Okay. Now, right now, I am down $75, well within my $500 allotment of risk, and we still have that continuation. It's coming down. That's what I'm waiting for. That's what I'm looking for. This is what I believe in, right? And again, if I'm wrong, it's cool. I lost $25, $50 as it stands, but I already made over $100 on the trade origin. Now, if for some of you that might not be impressive, small amounts. Well, small amounts because we are trading in crappy times. Once volume picks up at 2 o'clock to 2:30, we're trading in just ideal trading times. But here we go. We're going back into this trade design. You could see it is definitely panning out. Okay, patience is key here. You're seeing this live. You're seeing my execution live. Patience is key here, okay? If you don't have patience and you don't believe in your strategy, you're going to lose money all the time. Again, I'm looking at MACD, RSI. I'm trusting GoDeny. I'm trusting Confluence with the cloud there to the downside. I could see there's some sensitivity as we're approaching that level. I am profitable, $100. I'll probably get out the trade right there before it bounces on me. Okay, so two trades, over $100 profit each trade, and of course with small position size. I do trade with larger position sizes to make my time worthwhile. But again, I just wanted to illustrate the strategy, and you guys can see it in real time. I hope you learned something. Right? Check out the link down in the description if you want access to these charts and access to the community, and follow along with everything that I teach on a day-to-day basis with our indicators. It looks complex on the charts, but we follow the trader principles: trade design, momentum, entries, exits, risk to reward, right? Small entries, buy your winners, cancel your losers ASAP. It's something maybe you've heard before, and maybe you've had other people illustrate to you, but they do it in the closed market. That kind of sucks. That's no fun. We do it in a live market. I'm signing out. Peace.